Oraya mı açıp kapatıyorlar?
Yok işte, yok sahnede öyle bir kapının olması.
Ha, evet, evet.
Okay then, thank you everyone. I hope you're all suitably refreshed after the coffee break. So now it's time for our second panel of the day. And this is a very interesting area, which is the harmonisation of Turkish law with EU law. And again, we've got a very distinguished panel here. So just to introduce them briefly, we have Mehmet Gün, who is the founder and managing partner of Gün & Partners, which is a leading IPR firm here in Turkey. We have Bahar Nalan Danish, who is a corporate associate at ketenci&ketenci. We have Ayşe Guna, who is a senior competition lawyer at ELIG. And we also have EJ Ilda, who is a lawyer at Appbank. So, over to you guys.
Thank you. Good morning, everybody. Just a small correction about my firm. My firm has a leading IPR practice, but is a full-service firm. Yes, I'm very happy with the reputation about IP, but I'm at the same time very complainant because everybody thinks that I'm an IP guy, and they say this is intangible, Mehmet. Thank you very much. We have a very distinguished panel here. First, Ayşe Güner will make a presentation. Then Bahar Nalan will follow. And we will finish with Ece. We will be talking about Turkish rules and regulations compliance with the EU rules and regulations. I hear sometimes from even Turkish people and even Turkish lawyers that, you know, the European Union directives apply in Turkey, but not. Turkey, yes, is a European country by full heart. Turkey has applied for full membership, that's right, but Turkey has not yet accepted as a full member. Turkey has signed a customs union agreement, so the goods move freely between Turkey and the European Union, but Turkey is not a full member to the European Union, and therefore European Union directives do not directly apply in Turkey. The situation for Turkey is that, you know, there are so many chapters for Turkey and the European Union to agree that Turkish law complies with the European Union directives and acquis communautaire, but some of them have been opened, some of them should have been opened many years ago, but not opened, and there are so many chapters that are still to be opened. This makes Turkey puts Turkey in a unique position. Other than the European Union full membership, Turkey has a goal that's set by Atatürk, which is, you know, Turkish ambition is to catch up with contemporary civilization, whatever is available, and Turkey interprets this as the European Union standards. So Turkish national goal is to catch up, if possible, exceed the European standards in order to bring the country, you know, to a better position all the time. Consistent with this, Turkey would like to become a full member to European Union, and in accordance with that, Turkey would like to make its laws and regulations compliant with the European Union rules and regulations. So Turkey always looks for the Western rules, the European rules, and always, when making the rules and regulations, always checks that it complies with the European Union acquis communautaire. So my panel here, my friends, are going to talk about three different aspects, and we will start with Ayşe, talking about the harmonization of the Turkish competition law with the European Union legislation. I believe it was very early for Turkey to do that, but as far as I know, Turkish competition law is the first and probably the best compliant Turkish law with the European Union legislation. So Ayşe, the floor is yours.
Hello, everyone. I hope that you have been enjoying the conference so far, and thank you, Mr. Gün, for that nice introduction. So my presentation today is about Turkish competition law and the harmonization process of Turkish competition law with EU law. As Mr. Gün also said, that among all fields of Turkish law, competition law is probably the most harmonized up to this date. But of course, there's still some room for that harmonization to be improved. The harmonization of Turkish law has been since the Customs Union decision. As the European Commission's progress report noted in 2014, antitrust and merger control rules remain largely aligned and is effectively enforced. Turkey is moderately advanced in this area. That said, there's still some room, and the harmonization attempts with the amendment of the law has failed in the past. But in 2014, a draft law was presented to the Parliament and is now being reviewed. But because of the upcoming elections next week, you may also know, we don't know if that draft law will be passed anytime soon. But hopefully, it will be in this year. So in this slide, I will just provide you the gist of the structure of Turkish competition law. It's based on the Act on the Protection of Competition, law numbered 4054. The violation of this act may result in serious sanctions against the companies and their employees. The Turkish Competition Authority, which has been in existence since 1997, has been imposing serious fines over its 18-year history. The fines amounted to 2.5 billion Turkish liras. And even in some cases, individuals have received fines. In 2014, the most notable case was the Tüpraş case. Tüpraş is actually the largest energy company in Turkey. It refines crude oil and provides oil products. The Competition Authority launched an investigation against Tüpraş and alleged that it violated its dominant position via charging excessive prices in the market and engaging in abusive contracts. And as a result of that investigation, the authority held that Tüpraş abused its dominant position and imposed about 400 million Turkish liras of fines. That is approximately 130 million euros. Another notable case was the case against 12 banks, and that was once again a violation of competition law. The authority alleged that the banks colluded on their future interest rates and harmonized their interest rates and imposed about 1.1 billion Turkish liras of fines, which is about 400 million euros. There have also, as I said earlier, been cases against individual employees for those companies that violated competition law. The legal framework of Turkish competition law is very similar to the EU regime. There's an article that prohibits restrictive trade agreements, and that article is actually based on Article 101 of Treaty on the Functioning of the European Union. What we mean by that is, for instance, cartel agreements. These are illegal. For those of you that don't know what a cartel agreement is, take, for instance, two car manufacturers getting together and fixing the prices of cars or sharing customers among themselves. Such an agreement would be illegal and would face serious fines. Another article is the article that prohibits the abuse of dominant position. This article is based on Article 102 of the Treaty on the Functioning of the European Union. And what we mean by a dominant position is where a company has such a position in the market where it no longer has to consider its consumers, competitors, and fixes its prices on its own, so it no longer has to look over its shoulder anymore. Being in a dominant position is not illegal per se, but the abuse of dominant position is illegal. Then there's an article on mergers and acquisitions that restrict competition. Similar to the EU regime, the sanctions are up to 10% of the company's annual turnover, and the fines on the employees is 5% of the fine imposed on the company. There are also private damages available for individuals or competitors or consumers. And what's also at stake is, of course, the invalidity of the agreement. So what I just provided was the nutshell of the structure of Turkish competition law. With the draft law, this structure does not change, but there will be some mechanisms to improve that structure. The first mechanism is the de minimis rule. The Turkish law does not currently have de minimis rule, but under EU law, what de minimis rule basically is where, let's say, the European Commission looks at the companies that are being accused of infringing competition law and says that the market share of these companies are so low that I will not going to bother with them. This case is so trivial, so it will just ignore that infringement. Of course, this, needless to say, this is not for all infringements. The Commission, for instance, would not allow a hardcore restriction, such as a cartel, to go by. What we don't know with the draft Turkish law is whether it will be similar to the EU rule. The current mechanism in the draft law is such that it almost allows the de minimis rule to be applicable for all infringements. Excuse me, just recovering from a cold. But we anticipate that the de minimis rule in Turkey will be similar to the EU law and will not allow, for instance, cartels to benefit from this exemption. Another mechanism will apply to the mergers and acquisitions, which is what we call concentrations in competition law. The EU's merger control analysis test, SIEC test, which is the significant impediment of effective competition test, will replace the current existing dominance test in Turkey. Basically, what the dominance test does is, let's say that there's a merger among two companies. The dominance test looks at whether these companies become dominant after the transaction or strengthen their dominant position. What this test results is there might be false positives. So as a result of this new test, hopefully the authority will have more of the effects-based approach of the mergers and acquisitions and will hopefully avoid those false positives. Another highlight is the settlement procedure. This is actually also new to the EU. It has only been old to the US regime, but new to the EU. It has been in existence since 2008 in the EU. What it allows is, let's say the companies are being investigated and they approach the Commission and say, okay, we have heard your accusations and now we would like to settle in return for a fine reduction. This is actually a very useful mechanism because it dismisses cases and allows for a speedy resolution. When we look at the comparison chart, like I said, we do not have this settlement regime as yet, but what's provided in the draft law is very similar to the EU regime. First of all, requirement of admission of guilt. So the companies have to admit that they have done some wrongdoing. And in the EU regime, this is only available for cartels. What we don't know is if this will be the same approach in Turkey. So far in the draft law, it's provided as if this will be applicable for all kinds of violations, but in Turkey, in the EU, this is only reserved for those hardcore infringements as cartels. And in the EU, this provides for a 10% reduction in fine. We're yet to see if this will be applicable for Turkey. Just to give you an example of a recent Commission decision where settlement was applicable, in this case, the automotive bearings decision, where the companies approached the Commission and obtained a 10% reduction in their fines. But of course, the outcome was still over 900 million of fines. A final mechanism I'd like to discuss is the commitment procedure. This procedure is slightly different than the settlement procedure. This is where the companies don't have to admit their guilt. Let's say the Commission, or in our case, the Competition Authority, finds some allegations or some competition law problems. And all the companies have to do is they need to provide some future behavioral or structural commitments. When we say structural commitments, for instance, they can divest the company from their portfolio. And in terms of behavioral commitments, they would say, I used to be doing this act and I will no longer be engaging in these acts anymore. So unlike the settlements, it doesn't require admission of guilt, but it requires a commitment to a future behavior that the Commission or the authority will accept, and it must be sufficient enough to remove those concerns of the authority. Because the commitments will be in binding nature, in case the companies do not oblige or do not comply with the commitments they had provided, they can risk serious monetary fines. And what this mechanism overall does is, if there's a pre-investigation or an investigation launched against the company, if the authority accepts those commitments, it no longer launches that investigation or stops the pre-investigation. So it's quite useful. What we don't know for Turkey is whether this will be available for all cases. In the EU, this is all cases except for cartels. Some of you may know these notable cases where commitments were offered. So in the e-books decision of the European Commission, the Commission did accept the commitments that were offered by Apple and the publishing companies. These commitments were to terminate the existing agency agreements that included some retail price restrictions and the MFN clauses. Whereas in the Google case, this is the famous case that the Commission has been dealing with over the few years, is Google has been offering commitments for a few years now, but the Commission rejected those commitments. And finally, this year in April, the Commission sent a statement of objections. And in the objections, it's alleging that Google abuses its dominant position by favoring its own comparison shopping product in its general search results page. So just to summarize, there is a draft Turkish law that will hopefully further improve the Turkish competition law in its harmonization with the EU law. And what will provide further clarity is, of course, secondary legislation. As I have pointed out, there are several areas where we don't know whether the EU approach will be fully adopted in Turkey. And we're hoping that in terms of that secondary legislation, this will also reflect the EU jurisprudence and the cases. And of course, we look forward to those cases from the Turkish Competition Board to clarify these new mechanisms. Thank you.
Excellent. 2 minutes saved, Ayşe. Thank you very much. I'm sure you have questions. I have questions also, but please keep them until the end of the panel. Now we expect Bahar to give us on a presentation on Turkish company law.
Thank you, Mr. Mehmet Gün, for your kind introduction, and Ayşe for her informative speech, which gave us great information about the draft code. I will start with. I will outline today the effect of European Union acquiesce to Turkish Commercial Code briefly. And the Turkish Commercial Code is recently changed in 2012, I guess. So there are many amendments which were in line with the European Union acquiesce. First of all, I will briefly outline some important concepts in Turkish business life. The most form of business entities in Turkey utilized by both local and foreign investors are capital companies. Two of them are actually very common, joint stock and limited companies. Actually, these two types are limited liability companies, where the liability of shareholders are restricted with their capital commitments. I've mentioned of the amendments made to the Turkish Commercial Code. The new Turkish Commercial Code replaced the previous one, which was in effect for more than 50 years, without a fundamental change, with a view to modernize Turkish business life. For this purpose, international practice, especially European regulations, are taken into consideration for these amendments. So let's take a look at these directives. The European Union Directive of 2009, numbered 101, Article 3 requires member states to ensure that the filing of all documents by companies is possible by electronic means. Our new code now stipulates that trade registry records shall also be kept in electronic environment. And in compliance with this new regulation, a new central system was established. We call it MERSIS. Now we're able to register the companies and hold our General Assembly meetings through MERSIS. First pilot application was started, I think, in the city of Mersin, in the Mediterranean region. Then Ankara and Istanbul followed, and now almost every city in Turkey implements electronic system applications. But there are some challenges in this area because it's a transitional period. So not all transactions can be carried out through MERSIS currently, but we can establish companies and open branch offices and do some amendments to articles of associations through MERSIS. And Article 10 of this directive states that the acts of the company organs shall be binding, even if they are not specified within the objects of the company. During the term of the previous code, we had adopted ultra-vires principle. This is to say that any transaction which is not stated in the articles of association of a company was void. So we had to stipulate each and every operation to be carried out by the company in the articles of association. And so it was a bit challenging when it comes to a company to enter into new business areas. We had to amend the Articles of Association. But now, since this ultra-vires principle has been renounced, we're now able to continue with the current Articles of Association, and we do not need to make any amendment. Where did it go? Okay. And Directive of 2009, numbered 102. This directive enables limited liability companies to consist of a sole shareholder at the time of establishment or afterwards. During the term of the previous code, limited liability companies shall have 2, and joint stock companies shall have 5 shareholders at least. So this requirement was resulting with ending up with paper shareholders, because not all investors desire to have partners. So we would just create one shares, symbolic shares to real or legal persons, just to fulfill this number requirement. New commercial code abolished such rule in line with this European Union directive, and now we can establish single shareholder companies, which is very, I think, according to my experience, which is very advantageous for many foreign investors. And now M&A transactions, meaning that mergers and acquisitions. Provisions of the new commercial code related with M&As are structured in line with the Swiss Mergers Code. And Swiss Mergers Code is based on European Union directives, mostly the directive of 1982, numbered 891. Which was amended recently amended in 2009. So the main innovations here are, during the term of the previous code, we had to merge 2 same type companies. This is to say that joint stock can only be merged with joint stock, and limited could only be merged with limited companies. So this is now abolished. So now we can merge 2 different types of companies freely. Procedures and stages of merger are clarified. At the time of the previous legislation, there were not so many clear provisions regulating M&As. So now it is very clear, and transparency is achieved through audits and reports. Rights of the creditors and shareholders are more protected now. And simplified merger is stipulated for group companies, which is really helping us to merge group companies in a more quick way. And small-sized enterprises are given the opportunity to skip certain formalities. This means that, again, as in the simplified merger process, we can now skip the audit requirement or reporting requirement for small-sized enterprises. I'll get back to small-sized enterprises subject in the following sections. And also there are many amendments in the section of the merger, or we may call it division. This term was not regulated under the previous legislation. It was being conducted under many other laws. So there was a legal gap on this subject. Now it's also regulated in line with the Swiss code, which is again based on the directives of the European Union. The main innovations here are the mergers are classified as complete division and partial division, which is known in the international law as split up and spin-offs. And numerous clauses principle is adopted in the definition of valid demerger. This means that capital companies and cooperatives can be divided in capital companies and cooperatives. So, in order to avoid any void division, we first apply the conversion of company type, and then we implement the demerger process. Flexibility is provided by stipulating protected or non-protected share ratios. Rights of shareholders are protected by qualified majorities. And here again, like in the merger subject, small-sized enterprises are given the opportunity to skip formalities such as reporting or examination, which really lengthens the process. And I would like to emphasize small and medium enterprises in my presentation because small and medium enterprises, we can say that they're the backbone of Turkish economy, as they represent around 99% of Turkish economy. So I would like to first compare the use of this term in European Union acquis and Turkish legislation. In European Union law, small and medium enterprises are defined under European Union recommendation of 2003, numbered 361. Main factors to be considered to determine whether a company is an SMA are number of employees and turnover or balance sheet total. As you may see from the table, it is classified as medium-sized, small, and micro in accordance with the employee numbers or turnover or balance sheet total numbers. When we take a look at small and medium enterprises in Turkey, I mentioned that they're considered as the backbone of Turkish economy. So Turkey aims to play an international role in this area. Turkey became a member of G20 Troika as of December 2013 and will assume the chairmanship in this year's G20 summit, which is going to be held in Antalya this year. So small and medium enterprises will be an important agenda during our presidency. Turkey is also a co-chair of Global Partnership for Financial Inclusion, where it also holds one of the co-chairs in SME finance subgroup together with Germany and South Korea. The communique published on 2012 defines small and medium enterprises in line with the European Union recommendation I've previously mentioned. So following criteria have been set forth. As you may see, micro enterprise, small and middle sizes are also classified in line with the European Union acquis. If we take a look at the previous table, now I'm going to tell the Turkish numbers. Micro enterprise employing less than 10 persons, small enterprise employing less than 50 persons, middle size employing less than 250 persons. So these numbers are in compliance with the recommendation of European Union. As for the figures, for micro enterprises, yearly net sales amount or financial statement that does not exceed 1 million Turkish lira is set forth. And for small enterprise, this figure is 8 million Turkish liras, and middle size, it's 40 million Turkish liras. So when we compare it to the European practice, we can say that our numbers are more reasonable. Now I have to wrap up. I want to refer to a progress report which was recently published in October 2014. In the section of corporate law, the European Commission says that progress was made in the area of company law. Turkey continued adopted legislation implementing the Turkish Commercial Code. The Public Oversight, Accounting and Auditing Standards Authority improved its capacity. The scope of compulsory independent audit has been extended. Overall, Turkey is well advanced in this area. Well, the data and statistics show us that the number of companies established recently drastically increased, and Turkey is an attractive spot for foreign investors. So we can say that the innovations in Turkish Commercial Code has a very positive effect on Turkish economy. And that's all. Thank you.
Thank you very much. This was very good use of time as well. A good taster about the new Turkish Commercial Code. Now I invite Ece to the podium. She is going to talk about the financial aspects. Also, you will see some hints about the Istanbul Arbitration Center, why it came about suddenly into the Turkish scene a couple of years ago. Then we will close with her presentation.
Thank you, Mr. Gün. Hi, everyone. I would like to speak about, I think we could discuss Turkey's economic power and potential, and we will search the answer why invest in Turkey. I think I have a long presentation, Mr. Gün, but I will be quickly as well. Turkey acts in accordance with EU criteria because Turkey is undergoing a significant transformation politically, economically, and socially. And after EU-Turkey Association Agreement 1963, as you see as my presentation, Turkey signed Custom Union Agreement, and now we have the not European Union, a participant of European Union, but as the accession country since 2005. The EU and Turkey have a profound trade relationship, so we are the seventh biggest import and fifth biggest export country in European side. And we have about export of Turkey, we have export with transport material, chemical products, plastics, and about the import, the industrial goods, agricultural goods, and this is the sectors we have import to Europe, to European countries. About project finance of Turkey, we can see that the new economic policy aims unemployment to realize technology transfers to Turkey and the world economy and attract more foreign capital to our country. Turkey has classification of investments. There are some parts of investments, regional investments for project finance, large-scale investments, as you see, and this depends on regarding transportation, railway investments, automotive sector, and investments about tourism. Proposes the area for development of Turkey's cultural and tourism, and in this. As you see, are the sectors. We have some incentives for the project finance, as mine exploration under mine law, daycares, kindergartens, primary, secondary, high school investments, products for the Ministry of Science, Industry and Technology, small and medium-sized enterprises, investment in motor vehicles industry, and moreover than 55 million investment, and investment in coal-based electricity generation power plants and energy sector. About speaking on strategic investments, the minimum fixed of 50 million Turkish liras, and total imports related about exceed 50 million Turkish liras. Investments about organized industrial zones, investments in the made by investors with at least 5 individual or corporate shareholders, and provides integration of investment to be made common operating area. And the other investments about natural resources, annual minimum 500 tons equivalent oil energy consumptions, and return on investment in maximum 5 years. The government has some incentives for this project finance, for this projects. Investment incentives are available to investors through the investment incentive certificate, which obtained from the General Director of Incentive Application at Foreign Capital under Ministry of Economy, called authority. In order for investment, the granted and IIS, the minimum investment 1 million Turkish liras. So, this is the scope of why we invest in Turkey, because as you see, there are many project finance projects for investing in Turkey, and as this scope, government working on the project Istanbul Finance Center to make Istanbul having the biggest finance centers of Europe side. We need consultancy and support services by professionals are required for financial centers and participants. Such professionals include lawyers, accountants, tax consultants, advisors, arbitrators, and information technology teams. There are numerous international companies prefer Istanbul for their regional administration offices. offices seen it's one of the most suitable cities of East Europe and Middle East and Central Asia as a bridge. The number of services providers for the financial sectors is increasing rapidly. Turkish information technology provides services worldwide. On the other hand, there are improvements in accounting services. So the legal sector is enhancing an increasing number of graduates, a high quality join the legal sector. For Istanbul finance centers, you can find that the Turkey's foreign relations. Turkey is a member of UN and a member of Organization of Islamic Cooperation, a member of Organization of Economic Cooperation, Development, Security and Cooperation in Europe, Council Europe and NATO. And since 2005, Turkey is in accession negotiation with European Union. One of the Istanbul is one of the oldest cities in the world and center of history, culture. Also, there are millions of young, dynamic entrepreneurs located crossing point east and west, and following global crisis at a time, the international investments fell and search for a new financial structure in this progress. It's very important that Istanbul come forward with a competitive structure. There are positive developments in Turkish economy last years. And global business cycle and Turkey's recent performance clearly show that making Istanbul will be the international financial center. The vision of Istanbul International Financial Center project is defined as Istanbul will be a regional and global financial center. There's an action plan started 2009 and will be closed 2018. This action plan consisting to Istanbul Financial Center project under the coordination of Republic of Turkey Ministry of Development States, and also this action plan IFC Istanbul National Advisory Committee has an advisory committee and coordination office and working to close to end this project until 2018. For Istanbul Finance Project, this program includes following components: establishing administrative structure, that's done, and increasing the diversity of financial products and services, strengthening the legal infrastructure, improving the physical infrastructure in the cluster region, improving qualified human resources, and developing participation banking and Islamic finance system. Let's talk about Borsa Istanbul. After being a financial center for the European side, Borsa Istanbul is a very important cooperation. İstanbul Gold Exchange, İstanbul Menkul Kıymetler Borsası, and Turkish Derivative Exchange are merged under the roof of Borsa Istanbul 2012. Borsa Istanbul has become an international supermarket after this merge, and as an international financial service, that's like a Walmart of Turkish capital markets. This means you can find anything you need. There are fixed income securities, derivatives, including sukuk commodities, gold, diamond, and energy contracts in Borsa Istanbul. Established on base of capital markets law, Borsa Istanbul is an internal entity under private law. Borsa Istanbul is a regulatory entity. So, Borsa Istanbul's mission is establish, operate, and develop transparent, efficient, reliable, and accessible markets in facilitating trading liquidity and price discovery for capital markets instruments. And this is thereby contributing to financing economic growth. Borsa Istanbul is targeting to become a leading stock exchange of reflecting Turkish potential, and the legal landscape is field of capital markets in Turkey has recently undergone a major change, and in an effort to harmonize the Turkish capital markets regulation with European Union acquis and improve the integration of the Turkish capital markets with global markets and enhance competitiveness thereof. Turkish lawmaker has enacted running organized markets, but also restructuring and rebranding İMKB and gold exchange and also derivative exchange with this merger. The legal framework of Turkish capital market as is currently stand is mainly devised by two major pieces of legislation with Turkish Commercial Code and Turkish Capital Market Law. There is also an extensive deal of detailed level regulation which may be manifested communiques of capital market boards and regulations of stock exchange. And the current topic for Turkey is payment systems. Payment systems are very important these days because will be binding on 27th of June of this year. The law regulating electronic money and electronic payments in Turkey, namely law on payment and security settlement system, payment systems and electronic money institutions. This law introduced a new regulatory framework which covers the procedures and principles of payments and security settlement systems and also electronic payments. The law established a system to be used for e-money and related transactions, payment system structure providing the infrastructure and common rules required for clearing and settlement transactions. And payment institutions are defined as institutions providing payment services in accordance with provisions of the law. The applicants should be incorporated as joint stock company, and the share certificates applicants should be issued capital paid in cash, moreover than 2 million Turkish liras, and the applicant is required to have diligent management, adequate personal and technical equipment required for performing transactions under the scope of this law. And the applicant is required to have transparent and open shareholding structure and organizational management chart that shouldn't constitute an obstacle for the efficient provision of banking regulation and supervision agency. Also, electronic money, there are electronic money rules, money institutions, there are some rules in accordance to this law. They should be incorporated as a joint stock company and have have capital not less than 5 million Turkish liras, and their management, personal and technical equipment required for performing the transactions under the scope of the law. There are many corporations, and in Turkey, how does the banking system operate? The banking sector plays less a financial intermediary role than would expect in an economy of Turkey. Turkey's size and sophistication. The three state-owned commercial banks plus the 6 largest private banks hold nearly a 2/3 share of total banks' asset. Information on banks, listing of banks licensed in Turkey, statistic, Turkish banking sector, and Turkish banks engage in core banking services, securities brokering, and other business. In terms of the trade of finance, treasury operations, electronic banking, and information management, dozen leading Turkish banks are sophisticated as the OECD counterparts. The Istanbul Stock Exchange, formed in 1986, is becoming one of the major players in the capital markets, and now it's Borsa Istanbul, as I mentioned before. And the Central Bank and Banking Regulation and Auditing Commission supervises banks' activities in order to guarantee that meet liquidity requirements and operates in responsible fashion. While the Central Bank's Supervision Division acts the government's supervisory authority, the Undersecretariat of the Treasury is responsible for the enforcement of banking laws. Recently, as Turkish government decreased taking loans from national banks, the banks have turned toward the general public to offer credit homes, private vehicles, and general expenditures.
You have 2 minutes left, Ece.
Okay. You can see the amounts of the transactions in Turkey, Turkish banking transactions. But I want to sum up. There are many corporations, and being a financial center in Europe, there are some developments. I think we will be a financial center at the end of 2018. Thank you.
Thank you very much. This is why we talk about Istanbul Arbitration Center. Istanbul Arbitration Center is part of a big project. It's a long shot project called International Financial Center. The construction has been underway. I think it's about to be completed near Ümraniye, where all the banking institutions are moving towards to. As part of this International Financial Center, the administration is planned to be an autonomous administration, similar to Dubai International Financial Center. Within the financial center, there is a need for dispute resolution, and the Istanbul Arbitration Center is actually planned, also aiming to resolve disputes there. There was earlier a question about the independence of the arbitration center. Those institutions who, by the law, are owning and controlling the arbitration centers form the General Assembly, i.e. the owners, yet the center needs to be established, the rules needs to be written down, and also all the professionals that are going to act as arbitrators, lawyers, etc., needs to be set down. We don't know them yet, We organized a conference 2.5 years ago, where all the concerns were raised. Sustainability is very important. I think the government is addressing this. The government is making the funds available, making the place available for the arbitration center, also forcing all the government institutions as well as private and semi-official institutions to take part in this in the formation of the arbitration center. So this is sustainability in terms of owning the place has been achieved and secured. The second one, sustainability for the arbitration center, is the flow of work to the arbitration center. If you have an arbitration center, but without arbitration, no point in that. And that is also secured because it is intended to actually resolve the disputes arising in the context of the International Financial Center. We are expecting, it has been raised and it has been properly taken note that the domestic rules for dispute resolutions is not sufficient for the arbitration center. So we are told, and we believe it will happen that way, that the arbitration center will have state-of-the-art rules for resolution of disputes. So we are yet to see, but we have a saying in Turkey that it could happen tomorrow or earlier than tomorrow. So in one night, we might see that already prepared set of rules, already complies with international standards, might be put in place. So I would advise you to very closely follow the developments about the International Arbitration Center and position yourselves to play in that one. The chairman of Turkish Airlines have said that, above our head, millions of people are flying. So why don't we stop that in Istanbul, give them a tour of Istanbul within 24 hours, and then fly them to their direction? Instead of stopping in Dubai, why don't they stop in Istanbul? That is taking place. Now, we say that above our head, millions, maybe thousands, maybe hundreds of thousands of disputes are flying over. The Russians flying to London, the CIS countries flying to ICC. Turkish people are flying to ICC with disputes. Now, everybody agrees that between Dubai, Paris, London, Berlin, Frankfurt, there is a need for another arbitration place. That is Istanbul. In addition to logistic advantages, cultural advantages, etc., we have all that here in Istanbul. And first time in my 34-year-long professional history, I have seen that on one project everybody has gathered around. Maybe some authoritarian approach has made it possible, but it is taking place, and we are very optimistic that within a couple of years, Turkey and Istanbul is going to become an important arbitration center. With this, I will close the panel, invite you for discussions. But I have one question first to you. Would you prefer to ask questions or would you prefer to go to lunch? You prefer to ask questions, good. Any question? Please? Please state your name first so we get to know you. Maybe if you speak to the microphone, you will be heard better.
Yes.
Thank you.
My name is Richard Crowe. I work at the European Parliament, but I'll be on the panel later this afternoon.
Very good.
And thank you for your presentations, which were all very, very interesting. And I have questions for everybody, so to keep you going. For Aisha, the competition law, you said that it's taken from Articles 101 and 102 into Turkish law. Is it a real copy-paste of the actual wording? And if so, do you think it's going to be interpreted exactly the same way by the competition authorities and by the courts? So do you expect that the EU jurisprudence will be followed and that you will be able to make use of it? For Bahar, I was very interested that you mentioned the Swiss model, that the Swiss code is used as inspiration. Is there a historical background, or is it just this nice situation that Switzerland is in a similar situation to Turkey in that you have very close trading relationships with the EU, but you're not actually a member yet? And then finally, I think on the international investments, not a question, but just a comment. I come from Ireland, and it sounds very similar to what happened in Ireland back in the 1990s. Our government at the time came up with this idea of creating an international financial services centre in Dublin. Previously, we had no financial services industry, but they put in place the framework, and it actually boomed. We had many natural advantages, being a small English-speaking country. But the danger was, and what happened in the end in 2008, is that the financial services boomed so much that the regulation had become too lax. And when the crash came, essentially the financial services and the banks bankrupted the whole country, because the whole country had to bail out the banks. So I just hope that the same mistake won't be made in Istanbul. I think it's a very good initiative, and you have a very optimistic future. But also, of course, the regulation has to be kept on board. And similarly with the arbitration centre, I remember back in Dublin that they had a similar situation where they wanted to create an international arbitration centre and hopefully take some of the spillover from London. And they put in place all the framework and the Dublin rules. But in the end, I think it didn't really work. People still preferred London. The tradition is there, and that's what the Russians and everybody else preferred. But I think in Istanbul, you're absolutely right that you have some certain advantages, and I wish you the best of luck with that. Thank you.
Thank you very much. I will ask Bahar to answer first, then Ayşe, because I have another question about competition law. So, Bahar.
Thank you for your question. Turkish law is basically based on continental European law, and originally Turkish Code of Obligations and Turkish Commercial Code was inspired by Swiss codes. The reason for that may be that during the foundation of Turkish Republic, the legal professionals were educated in Germany or German-speaking countries. So that may be the reason that we still inspired by Swiss codes.
Ayşe, before you answer his questions, I would like to add to that question that one provision I think I was overlooked in the competition law is the establishing competition. When the market does not have proper competition, so it is a duty, I think it is stated in the law that the competition is established first before applying the competition rules to preserve the competition. I think Turkish Competition Authority has made some mistakes that resulted in losing Turkish companies, entities, their competitive power. That comes when you delve into the definition of marketplace. Is the marketplace restricted to the geographical borders of Turkey, or is the marketplace is the actual geographical size of the market wherever it may be beyond the borders of Turkey? For example, I think the earlier decisions of the Turkish Competition Authority about the Turkish fertilizer distributors were mistaken, so that they stopped the companies from growing competitive. Instead, they became dependent on raw material suppliers. So if you could deal with both questions. Thank you.
So, Mr. Crow, to address your question first, we've had those articles that Article 4 of Competition Law and Article 6 of Competition Law, which are akin to 101 and 102 of the Treaty on the Functioning of the European Union, they have been in existence since 1994. So with the draft law, those clauses are not going to change, but as I explained, there will be new mechanisms to improve those articles. In terms of the interpretation of those articles, that's indeed, the Turkish Competition Authority, the Turkish Competition Board, have utilized EU jurisprudence. For instance, when we have a case that is, let's say, first and has not been dealt before by the Turkish Competition Board, we often cite not only the EU cases, but also the US cases, just to show the comparison of what's going around the world. We utilize many ideas and arguments that have been put before other authorities around the world. And it's not a binding authority in Turkey, so the competition authority it's not bound by the EU jurisprudence. That said, it's a very persuasive authority, so we do often cite those. And the authority itself also in its decisions do cite the Commission cases and ECJ cases often as well. And to address your question, Mr. Gün, in terms of the geographic definition of the relevant market, this is a very interesting debate and a question. It actually depends on the products and services that are at stake. For instance, in the global mergers and acquisitions, we in case if it's favorable to the client's perspective, we argue that the case that the geographic market needs to be defined broad, so even broader than Turkey. We have done this in many cases, for instance, where the company's market shares in Turkey may be quite high, but their market shares elsewhere around the world is not that high. So, and there have been previous cases where the Competition Board did go ahead and define the geographic market even broader than Turkey, which is actually against Article 2 of competition law, because by that article, the Turkish Competition Board's jurisdiction is actually limited to Turkey. But let's say in the cement sector, the authority will not define it as broad as Turkey, but there's, for instance, a 250-kilometer test where the products at stake, for instance, cement, cannot be carried over further, so the board will define it, let's say, limited to a certain city or certain cities combined. So we're looking at the products and services that are at stake when defining the geographic market.
Thank you. Any more questions? Please. Wait for the microphone, please.
Thank you for this now lovely event, first of all. And my name is Onur Ucuzal. I am kind of interested in EU competition law. That's why I have a kind of question about the settlement procedure. And I was wondering, like, if there is any benefit for this settlement procedure to companies to settle. Like, do they really need settlement procedure itself? Like, they already have leniency policy and commitment procedures. What are the benefits, actually, of this procedure?
That's a very good question. Do we need a settlement procedure? My personal thought is yes, because of course there are benefits and there are downsides, but one of the benefits is that, as you mentioned, that there is a leniency procedure. For those of you that don't know what a leniency is basically where the company engages in certain acts and they go to the authority and disclose what that act is, and they may not get any fines if they're the first one to reveal their wrongdoing, and if they're second or third, they may get reductions in fines. So yes, we have had this procedure for a number of years in the EU and also in Turkey, and it has been utilized in Turkey. Not as much as, of course, the EU. We don't have more than, I would say, 10 or 15 cases for leniency in Turkey. But what the settlement procedure does is, let's say that you obtain leniency and you obtain some percentage of reduction. If you were the second, let's say you obtain 50% of reduction, settlement would allow you to combine another 10% of reduction in fine. So the leniency applicants would be, their reductions coming from the settlement would be added on top of the leniency. So that's a favorable thing to have, I would say, for the companies. But the downside, of course, will be when you have settlement negotiations, these are all negotiations with the authority. There have been previous attempts with the Commission where the companies tried to settle and there were negotiations, but the Commission pulled aside and did not accept the settlement procedure. So the questions can arise in terms of human rights and due process. What happens when the companies disclose too much to the authority? So we will eventually, when we have the settlement procedure, as Turkish lawyers, we will be eventually dealing with these cases and will be benefiting from the jurisprudence that is currently going on in the EU.
Question? No question. Thank you very much. Now we finalize our panel. Thank you very much for listening to us. Thank you.
Yeah, so thank you very much for all your input. It was very interesting. And also to the panelists earlier on. So now it's lunchtime. So imagine you're all pretty hungry. But we'll be back here at 2 o'clock for the afternoon session. So see you soon. And I believe the lunch is just very close to here at the BAU port. So thanks.